Hey there, Wealth Press subscribers, viewers, and traders. Welcome to yet another midweek update with Lance Ippolito. Lance, how are you doing?
Good, good. How are you, James?
I'm rocking the free world as per usual. Lance, let's talk about the markets generally. Yesterday, just so happened when I was writing my market update, the S&P 500 crossed 3385, which was its all-time record. And so once again, the S&P 500, the NASDAQ 100, and the Dow are all at all-time highs. At the same time, gold gets smacked down by almost $100 in a single day as the nefarious manipulators of dollar interests come out of the woodwork with their bogus futures paper and sell the gold price down in the future, which of course drags the spot price down. Though if you tried to pick up a bar of gold today, you'd find the price was actually higher than it was yesterday, which is really intriguing. How about them apples? So what's going on in this marketplace?
Well, we actually had a rotation when we had the money flow out of the NASDAQ stocks, the tech names, and into some value stocks. And that's one of the reasons why the S&P made that leg higher, and why we've actually seen the Dow start to outperform and small caps. So we had about a 2-day rotation into value, notably financials, as we spoke about the gold sell-off. We actually had gold sell-off, money coming to the banks, and it lasted for 2 days. And now the banks are getting their butt kicked all over again. And gold here up about 10 handles, 0.5%. Silver's bouncing back as well, up about 3% today. So it was fun while it lasted. You had Wells Fargo go up for a couple days, now printing near 52-week highs again. That's how quick rotation is. Your growth stocks that got sold really hard over the past week, they're bouncing big time, up 3 to 5%, some of these names. So
So this is really a trader's dream, eh? This market?
It is, it's funny because you'll see the folks on the financial media talk about, well, now's the time to buy the banks, or Warren Buffett bought Bank of America for 10 days straight. And we're going to have the new rotation. And then it just lasts for a couple days and then fizzles out. And it's back to good old Apple, Microsoft, PayPal. Yeah.
How old is Warren Buffett now?
Oh, God.
Yeah. I think
late 80s.
All that Pepsi Cola is, or all that Coca-Cola is starting to build up plaque in his synaptic pathways, judging by his continued love affair for Wells Fargo and Bank of America.
Well, I hear on the street there's a new king of the stock market by the name of Dave Portnoy, and he's taken Warren Buffett's spot. Oh. And you know what? He's crushing the old man. I'll tell you that much. The Dave Portnoy from Barstool Sports.
What? He's got that kind of capital?
He's a self-directed trader, but he's the gentleman who sold Penn. He still owns a lot of Penn stock, and guess who got an upgrade today? Penn Gaming. And the sports betting stocks are on fire, even though there's no sports. So,
that's interesting to me. The sports betting stocks are always sort of got this extra layer of risk, which if your franchise is called Barstool Sports, then I'll probably listen to you and give you more cred than any other analyst. So good for him to be able to find the actual bright, shiny spots in that otherwise dismal fabric. But I guess the whole sector is expected to outperform in the stay-at-home COVID world, at least as it pertains to non-field sports.
Well, yeah, I was thinking about this today because you have GAN, this is another sports gaming stock, recently IPO'd, by the way. I was thinking about it earlier today. I was like, if there's no sports, then how is sports betting gonna take get popular, right? And maybe they're just foreshadowing when sports come back, people are gonna, bet and gamble on them. But then I was thinking about it in, the casinos like your MGM, LVS. If people don't have to go to the casino and they can sit at home, let's just say sports do come back or we do play. I think there's hockey and baseball starting, or hockey's already playing with no fans. But if you could sit at home, bet on your phone, and not have to leave, COVID or no COVID, you got to admit people are bored. They're gonna bet on sports.
Yep.
They're gonna do something. They need some kind of vice.
Yeah. Well, between betting on stocks through Robinhood and betting on sports through these gaming sites, I mean, what's a poor millennial to do otherwise?
I mean, seriously, you they could drink. I thought they were gonna smoke a lot of weed, but the weed stocks haven't caught a bid. They just
Well, did you see the Canopy earnings there? Only another $129 million loss, and that's been sort of painted as good news for the company by analysts. They didn't lose as much as we thought they would. It's like that does not make a good argument for investment in my book
at all. And Tilray coming out with, I mean,
but then you got Trulieve on the other hand.
CEO making media rounds and the dispensaries. You'd think that stock was an Apple or a Microsoft the way it's been reacting.
Yeah.
So it's definitely those dispensary names. Curaleaf, Trulieve, they're the stars.
Yeah. Yeah, that's and as expected, at least from our camp, we kind of folded up the cannabis franchise in the Midas letter space because all of the companies that had been our sponsors, we knew were not going to perform well. So it got to this point where, well, we can't in good conscience cover them favorably, which means we can't actually help them. And what we can cover favorably is the U.S. stocks in the big markets who are actually, demonstrating good margins and increasing stores and, like Trulieve and Cureleaf. And it's like, there's no point in talking about the Canadians. And so we said, screw it. Let's go back to our roots in technology and gold and biotech. And so there we sit today. So, okay. So what's the opportunity this week that traders might be overlooking?
It's a really good question because of the rotation right back into tech today, even though Cisco's down 11% on earnings, by the way. It's with 1 day left in the week, and I just see Trump's holding a press conference today at 5:30. And it looks to be no traction with the unemployment benefits, which the market has brushed off, by the way. So you can't rely on that news. I really just think if you want to be in the market and you've been looking at some of these strong tech names that have dipped over the past week or two, you could start nibbling in. And I would not have, probably said that earlier in the week, but it's tech is like the new VIX, to where if the market sells off, let's say coronavirus, unemployment benefits, whatever it may be, that's been the headline news, the tech names have been the flight to safety on a market sell-off. And if you're going into value, and let's say you're going into banks and you think, well, the banks are going to have a leg up because they've been beat down. Well, what if the market sells off? They're going to get hammered. And you'll have these tech names that are just going to bounce right back because the whole work at home economy. It doesn't make a whole lot of sense from a fundamental point of view, but when you see Apple running into the stock split, and you see the reaction Tesla, what are we, about 200 points since announcing the stock split? How can you bet against tech when you have Apple so strong, which is leading the way, and having the stock split upcoming where people can now come and Apple at a lower price point. I was going to say cheaper price, but then I caught myself because
Right.
technically nothing changes on the.
So, what do you make of this escalating sort of rhetoric between China and the United States? Where I read this morning that there was a risk that China would threaten to sell their $1 trillion in U.S. Treasuries, and that the U.S. was threatening to freeze and prevent them from doing so by canceling them. And I thought, oh, wow, there's the whole financial house of cards at its foundation being, you've got one guy's trying to pack dynamite into the basement, the other guy's, spraying the place with napalm on the other side. It's like, isn't it just a matter of time till something gets ignited? And, and that, if the financial economic war between the US and China was to escalate to the point where, well, what's China got? China's got the biggest market for Apple. What if China closed the door to Apple products and Cisco products? What would that do to Apple, Cisco, and by extension, the entire market? Is that a real threat in your view right now?
We've seen this before with China, threatening us with all the debt. I personally think, and you have to think with the upcoming election, are we really going to have anything major happen? Is the administration really going to, have something major happen ahead of the election? Probably not. They'll probably try to keep it at ease like they always do.
Well, I don't know. What about Trump? He's feeling cornered. He's feeling like he's losing speed. He might do something desperate to take the attention off of his dismal numbers.
I do understand that, and it's very he's very vocal and very doesn't want to seem like a punching bag and wants to be perceived well. If I didn't see all this news happen time and time again and just the whole China situation, I just think nothing is ever going to get resolved. And not to sound negative into politics, but let's say they stop iPhones and all this stuff. I don't think it matters. It's going to be a short-term headline news for your Apples and your tech stocks, and then you never hear about it again. It's just the market doesn't care. But when you have all this money coming in and you have still all this money on the sidelines from fund managers that didn't believe we were going to bounce so hard with the off the March lows, and you still have shorts trapped in the market thinking we're going to retest the lows. Like, I just think we consolidate and we have another leg up, especially towards the end of the year. And yes, usually around this time, tech is a little bit weaker. Okay, it was weak for 2 days. Here we are all over again. It just, it's hard to be bullish, but it's even harder to be bearish right here. Because if you are bearish, I understand, I get you. But I look at my watch list and I have multiple stocks up 4 to 5% today, just on my front screen here. And like, I look at my down names or the down sectors, and besides banks and a little bit of energy names, okay, they're always down. It's insane, but good earnings are being sold off in tech and they're being bought right back up. That's market 2020 in a nutshell.
All right, Lance. Well, let's leave it there for now because I feel like we're a broken record every week.
I know, and it really is. But it's like, it's just, you're seeing just this here, this, and it's just, it's just sloppy. It's headline news, headline news, headline news. And it's really hard to find something that's trending here in the market. besides really your gold and silver names, and obviously they've taken a little bit of a hit, but here they are starting another leg up. So it's like you have to really pick what you like, write it down, and when they do have a couple down days or on a red day, that's when you start nibbling in. You don't want to chase when the stock's up 5, 8, 10%. Just be patient because usually the positions will come to you.
Right. All right. Great, Lance. Well, thanks for your time today, and I look forward to speaking to you again next week. Have a great weekend.